Welcome to The Explainer. Today, we're going to jump right into a financial plan that's been designed specifically for women, LIC's Bima Lakshmi. And we're going to use its own brochure as our guide to figure out exactly how it promises to build financial prosperity. So let's get started. Right off the bat, you can see this isn't being sold as just another insurance policy. It's really positioned as a promise of protection, savings, and most importantly, guaranteed prosperity, all tailored for women. This really sets the stage for what's framed as a journey toward financial empowerment. Okay, so what's this promise actually built on? Well, it turns out the whole philosophy rests on three key pillars. And here they are. The brochure breaks down the whole offer into these three distinct promises: protection for your family, savings through a limited number of payments, and prosperity with guaranteed growth. Now, they call it a non-participating plan, which is really just jargon for saying your returns are locked in. They're totally independent of how the stock market is doing. So who is this financial journey actually for? Let's take a look at who's eligible to get started. The entry age is pretty broad, covering anyone from 18 all the way to 50. What's really interesting here is the structure, right? The policy itself runs for a fixed 25 years, but, and this is a key part, you're only paying premiums for a much shorter time, somewhere between 7 and 15 years. And the minimum amount you can be insured for, the sum assured, starts at 2 lakh rupees. All right, next up, let's actually trace this journey out over time, from that very first payment all the way to the final payout. This little map from the brochure is super helpful. It really lays it all out. You kick things off by picking your insured amount and how long you want to pay for. Then you pay those premiums for that limited time. Along the way, you start getting regular income, which they call survival benefits, all while your money continues to grow behind the scenes. And then finally, at the 25-year destination, you get your big maturity benefit. So you're probably wondering, how does the money actually grow? Well, this is a really key feature, that 7% guaranteed addition. Think of it like this. Every couple of years, the plan takes a look at all the premiums you've paid so far, and it adds 7% of that total. It's this steady, guaranteed boost that really helps that final number get bigger and bigger over time. Okay, now for the part we've all been waiting for, the money. Let's break down the three main ways this plan actually pays out. And remember, these are all guaranteed. So you've got these three core benefits. First, the death benefit. That's the safety net for your family, of course. Then there's the maturity benefit, which is that big lump sum you get at the very end of the 25 years. And finally, you've got the survival benefits. And these are pretty interesting. They're regular payments you get while the policy is still active. And speaking of those survival benefits, you actually have some choices here. You're not just stuck with one way of getting paid. The plan gives you three different options, so you can kind of pick how and when you want that money to come in. Let's look at these. Option A is simple. You get one big lump sum, half your insured amount, right after you're done paying. Option B is all about smaller, more frequent checks. You get 7.5% every 2 years. And then option C is somewhere in the middle. Bigger checks, but less often, 15% every 4 years. It really lets you line up the payments with what you think your life will look like down the road. Theory is great, but let's make this real. How does this actually look with real numbers? Luckily, the brochure gives us a case study to walk through. It's for a 35-year-old woman who goes with option A. So here are the details for our example. She's 35, she's insured for 2 lakh rupees, and she chooses to pay her premiums for just 10 years, even though the policy runs for the full 25. That works out to an annual payment of about 34,500 rupees. And here is the punchline. This is what it all leads to. She pays in a total of about 3.4 lakh rupees over those 10 years. But what does she get back? At the end of the term, her total guaranteed benefit is almost 8 lakh rupees. I mean, that's more than double what she put in. And the best part? It's completely guaranteed. No market risk. But that's not the whole story. Beyond the basic setup, the plan has ways you can tweak it, customize it, and add extra layers of security if you want to. For a little extra in your premium, you can add on these optional features called riders. They cover things like accidental death or disability, but what's really worth pointing out is the special female critical illness rider. That's a huge deal, offering a financial cushion for specific health issues women might face. The plan also has some nice flexibility built right in. Life happens. So after just 1 year, you can actually take out a loan against the policy if you need cash. You can also choose to get your final payout in chunks instead of one lump sum.
And you can even tell them to hold on to your regular survival benefits and let them earn interest for you. All right, to wrap things up, let's quickly go over some of the fine print. These are common insurance terms, but they're super important to know.
So what happens if you miss some payments and the policy lapses? It doesn't mean it's all gone. The revival rule gives you a pretty generous 5-year window to get back on track. You just have to pay what you owe plus some interest. And what if you've paid for at least a year but just can't continue? Again, you don't lose everything. The policy becomes paid up. What that means is your life insurance continues, but for a smaller amount that's based on how much you've already paid in. It's a nice safety net. This one is a big deal. It's all about your rights as a consumer. As soon as you get your policy documents in the mail, a 30-day clock starts ticking. This is your free look period. If you read it all and decide, you know what, this isn't for me, you can cancel it and get your premium back. So when you boil it all down, the message they're sending is pretty clear. This isn't just about insurance. It's being sold as a disciplined, guaranteed way to invest in your future, one that takes all the guesswork and market ups and downs out of the picture. So we've walked through how this whole plan works, the benefits, the flexibility, the guarantees, and it all leads to a final question, one for you to think about. For your own financial goals, in a world that can feel pretty uncertain, how much is a guarantee really worth?